Hello everyone, my name is Vikas Agrawal and I am the founder of AIF and PMS Experts India. Well, AIF and PMS Experts India is one of the largest platform for investing in alternate investments and portfolio management services. So at AIF and PMS Experts India, our endeavor is to sort of educate and empower investors so that they can take the right decision in their life and attain their life goals. So what we've decided is, initially when I was laying down the foundation of the organization, I thought that why not we'll also build a sort of virtual property in which we invite the best experts from the industry, read their mind, learn from their wisdom, learn from their investing wisdom and create wealth. So therefore we started this show called Ask the Expert, wherein we invite industry experts and we ask questions on your behalf. Because there are a lot of investors, especially new age investors. We talk about new age companies, but there are new age investors who are entering in Indian markets, and they would like to know more about how do they create wealth. So therefore we thought we'll sort of organize these knowledge based sessions and talk to you. So this is a very special day of my life, because this time I've invited my friend, my mentor, I would say, Mr. Gautam Baid. He's the author of a book called Joy of Compounding. This is one of my favorite book. At least I would have read 7-8 times in last 3-4 years time, and I have learned a lot from this book. And I met him at Berkshire Hathaway's AGM long back, and ever since I met him I've been following him on various social media, and he's adding a lot of value to the entire investor community by sharing his wisdom and sharing his learnings of investing with all of us. In fact, he has been reading all Berkshire Hathaway's AGM's letter. He has read all the letters since inception, and he also wrote to Warren Buffett, and Warren Buffett acknowledged his letter. This itself is a remarkable achievement, I would say, because the way we look at Warren and Charlie both is like they are an institution by themselves, and there's so much to learn from these world's richest successful investors. So without wasting too much of time, I will directly speak to Gautam now and interact with him and try and learn today. So Gautam, first of all, thank you so much for accepting our request and coming all the way. I know you're based in US, but since you are in India, we thought of inviting you and try to grab this opportunity of reading your mind.
Thank you for the warm introduction, Vikas bhai. I hope to add a lot of value to your audience today.
Right. So Gautam, one of the things that I wanted to start with, this book is the best-selling book. If you look at across the globe, there are, I think, more than 10 countries that book is getting. So what was the purpose of writing this book? Let me begin by asking you this question. When you were writing this book, what was going in your mind?
So, like with everything else in life, the writing of this book also has a very interesting backstory to it. So I would like to share that with the audience today. So in November 2016, I joined Twitter, a social networking platform, and I started posting my thoughts on various subjects like philosophy, psychology, history, investing. And within a few months of me joining Twitter, 2 people from India flew all the way to Salt Lake City, Utah in US to meet me and actually thank me for what I was posting on Twitter. And they were the ones who gave me the idea of writing a book.
Okay.
And I thought, okay, I already have most of my learnings and thoughts documented nicely in a Word document, and I have this habit of just recording everything in real time on a daily basis. I like to keep learning something new every day.
Sure.
But more importantly, I like to note things down. I think maintaining a journal is an integral part of being a lifelong learner, because you can refer back to that journal and then avoid repeating the past mistakes, and you also get to learn something new all the time. So I thought, let me just publish my learnings into a book, and I self-published the book. I spent all the money out of my own pocket to publish the book, logistics, marketing, distribution, production. That time the only idea was to give back to the investing community, from whom I've gotten to learn so much over the years. So I decided to charge 0 royalty. This was just done as a goodwill gesture. I thought probably the book will sell a few hundred copies, and I'll get the blessings of a few people, and I'll also maybe get in touch with a few like-minded people. That was the basic thought process behind self-publishing the book initially. Right. But one of the biggest learnings of my life, Vikas, is that when you help others unconditionally, the universe works in such a way so as to reward you back multiple times over. So in May 2019, I was at the Berkshire Hathaway AGM. I was at Cretin University, sitting alongside Guy Spire, one of my investment role models, and we were signing copies of our book for the readers. And lo and behold, Miles Thompson from Columbia Business School Publishing, he flew down from New York to meet me in Omaha, and he offered me a publishing opportunity with them.
Sure.
And being a value investor, I always had a quiet dream of being published by Columbia someday, because that is where the value investing discipline originated.
Yeah.
Benjamin Graham used to teach at the University of Columbia. So to get published by Columbia was a very big honor and a privilege, and the rest is history. Today, The Joys of Compounding is an international bestseller in 7 countries in the world. And one of the key reasons for the success of this book, I would also like to attribute the same to Warren Buffett as well, because one of the preconditions of Columbia from me was, before they could publish the book, I had to get the approval from Warren Buffett himself to include the copyrighted content from his Berkshire Hathaway shareholder letters. So I wrote a letter to him talking about what the book is about and how I plan to share my learnings with people. And then he wrote back a handwritten letter to me praising this book after reading the manuscript. That was one of the very big high point in my life. And having gotten Warren Buffett's blessings, and I think that was a very, very big thing in my life. So I'm very fortunate and privileged in that sense.
Great. I would vouch for it because I was there in Omaha, with you those days in 2016. I remember now, and of course, it's a different feeling altogether. So many congratulations for that.
Thank you.
So now let's come to the book. So this is the book Joy of Compounding Wealth. Those who have not read, I strongly recommend that please buy this book from Amazon and read it immediately. So the first thing that you talked about, and this is one of my favorite things, and Charlie Munger, because I heard him saying this many times. He says that I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines. They go to bed every night a little wiser than they were when they got up, and the boy does that help, particularly when you have a long term ahead of you. So, Mr. Charlie Munger always talks about this learning machine thing, and you also picked up this. That's the first thing that you picked up. Can you throw some more lights on that?
Sure. There's so much wisdom in those words by Munger, and I think, it's something which all of us should follow. All of us should try to become a bit more wiser every single day. You see, our body is limited in ways that the mind is not. In fact, by the time most of us are 40 years old, our bodies begin to deteriorate. But there is no limit to the amount of growth and development which our mind can sustain. Reading keeps our mind alive and growing, and that is why all of us should inculcate a healthy reading habit.
Right.
This is the key to Warren Buffett and Charlie Munger's success. They say they spend 80% of their daily life reading or thinking about what they have read.
Right.
Therein lies the secret of becoming smarter. The key to achieve success in life is to read and learn constantly and to keep growing every day. Because if you can harness the power of compounding to the field of knowledge and your personal development, then over the long run you can't help but succeed.
Right. Now, when I saw lifestyle of Warren Buffett when I was in Omaha, I saw that the distance between his office and his residence is hardly 20 minutes. And every day when he reaches, he spends almost 7-8 hours in the office, and he's reading book throughout the day. So that clearly indicates that even at the age of 93 and Munger 1999, Charlie Munger, still their readings so much, they spend almost 70-80% time on their reading, clearly indicates that, once you become habituate of learning machine, then if you don't get the desired learning every day, it's like, you're hungry to look forward for those learnings.
So here I would like to add something very interesting which I've shared in the book as well. There is something called, dopamine is a pleasure chemical which is released in our brain when we engage in any pleasurable activity.
Right.
Many of us, we tend to, engage in one of the seven sins, and then we derive the dopamine chemical. What Charlie Munger has done is, he has trained his brain in such a way so as to derive this pleasure chemical by learning or discovering something new.
Sure.
So he has oriented his mind in such a way. He gets a kick out of learning something new. And the moment you orient your mindset like that,
right,
then every day becomes very exciting because you're getting to learn something new every day and becoming more happier as a result. You don't look at it as a tedious activity anymore.
Right. And when I interact with most of the successful people, the first thing when I ask them what is the reason, what is the secret behind your success, the first thing which comes out of their mind is that they're all learning machines. I mean, any big entrepreneur you talk about, be it India or maybe US, but the first thing that they say is that they are all learning machines. So, and I think for becoming a successful investor, you need to be sort of learning machine. So my second question is, recently you launched your PMS also in India, and you also talked about portfolio management services in your book. So let me ask you this question in a different way. So you were very sure that you want to be portfolio manager in India, hence you've given this as a subject in the book in 2016, or it was not planned but you thought of covering that subject and then eventually you became portfolio manager in India?
Because since you know my story, when I self-published the book initially, that time I was working as a front desk hotel clerk at a hotel in San Francisco in California.
Right.
I could have never imagined that this passionate pursuit of lifelong learning will take me from there to becoming a portfolio manager of global equity strategy at Summit Global, then eventually starting my own India fund in the US, and now becoming an equity advisor to a PMS in India. All this where I stand today is a result of the passionate pursuit of lifelong learning and a relentless pursuit to constant self-improvement every single day. And apart from improving ourselves, we should also try to improve others and add value to others, because this is compounding of goodwill. It's a concept which is less talked about, but it is very, very powerful. We are able to create wealth only with the help of others. So giving back also has to be a part of our planning.
Well said, well said. It's a very touching story that you talked about. Then you were there with, you were in the hotel industry and you were there working with them for almost 15-16 months of your career as a receptionist, and I mean that's a different mindset altogether. And if you are really dedicated, sincere, and really ready to sacrifice in your life and be a learning machine, learn a lot, obviously you become fund manager. So many congratulations.
Thank you. And it was all about focus, I would say. So I'll share an interesting story here. So when Warren Buffett met Bill Gates over dinner at his house in US once, so Bill Gates' mother asked both of them, what is the one single attribute which is the key to both your success? Both of them answered together, focus. When I went to the US in 2015, I was very clear and focused that I only want to get a job on the stock market side, preferably on the buy side. I was earning good money in my previous job as an investment banking analyst in Deutsche Bank, but that job did not suit my personal nature and my personality. And true happiness in life is not just about having high income. It's when you're living a life aligned with your personal value system, that is when you get true job satisfaction and fulfillment. So I was very focused that I want to do a job only on the stock market side. I'm a CFA charter holder, hopefully I'll get something. But I'll be honest here, I never thought I'll straight away get the role of a portfolio manager. I thought I'll join as a junior analyst, then get promoted to an analyst, then senior analyst, then assistant portfolio manager, and then finally reach portfolio manager after 13-14 years. But that's how compounding works, right? And like I applied to more than 1300 jobs during those 15 months at the hotel, and very few people I think can handle 1300 rejections like I did. But the way compounding works is, compounding will bestow its magic and benefits upon you only after testing your patience and conviction to the fullest. You have to go through that initial valley of disappointment, like I call. There's an initial valley of disappointment, and then there is the peak of euphoria. But to get on the J curve and to experience that euphoria, you have to go through that initial grind. All the good things in life take time.
Sure, truly appreciate your honesty, and the story is very inspiring, Gautam. And now coming back to, in Berkshire Hathaway, one of the observation I saw Bill Gates coming and attending this every year. So he's like on the board of Berkshire Hathaway, or how is the relation between them?
He was formally on the board of Berkshire Hathaway, but I think last year he has stepped down. Now he's no longer on the board.
Okay. But I see he's contributing back to the society a lot, as in
big way, yes.
Yeah, so great. You talked about that also in your book, so can you also throw some more lights on that for the benefit of our audience?
So I'm a big believer in the philosophy of good karma and philanthropy, and I've talked about a few real life examples in the book as well about how just helping others unconditionally has helped me in many parts of life. So in the investing, I think that value investing community in general is a very helpful community, and this is probably the only industry in the world where all the competitors are also very generous in helping each other out. I think that's the beauty of our value investing community across the world. In no other industry will you see competitors helping each other out. But our industry and our community is such that we like to help.
That's the beauty of our industry.
That's the beauty of our industry actually. We are very generous with sharing wisdom, sharing information, helping each other out. That is also what really attracts me to this particular profession. It's a group of very like-minded, good people.
True. Well said. So my question is, because now you've launched your PMS, so I just want to talk to you about that in next few minutes. My question is that how different is your PMS than other PMS? Because there are well-established PMS houses in India, and they've been doing this business for over 2.5 decades also. And some of them have really done well over a period of last 20 years. So my question is that when you thought of launching this stellar PMS in India, along with Complete Circle, so what was there in your mind, and what is the investment philosophy? How will you create wealth for your investors?
Sure. So the first key thing in which we differentiate ourselves from our peers in the PMS industry is that we do not fall into any one single style bucket. We are not a large cap PMS or a small cap PMS or a mid cap PMS or a growth PMS or a value PMS. We are opportunistic investors. We invest wherever we find opportunities, and we invest across small cap, mid caps, large cap. It's a multi cap approach with a focus on small cap and mid cap and special situations as well. So an investor gets access to all areas of the market wherever there is opportunity through Stellar Wealth PMS. That's one. Now about the investment philosophy. At Stellar Wealth PMS, there are two key pillars of our investment philosophy: variant perception and long-term structural trends. So let me just elaborate a bit on both these parameters. Variant perception refers to situations where you get return on capital employed, ROC expansion coupled with earnings growth. Therefore, you get valuation re-rating, and this is how you get multi-baggers. And variant perception comes from having a differentiated view on the short to medium-term trajectory of a business. So how do you get that? How do you get this differentiated view? What are the various triggers for variant perception? There are many, but let me list a few for you. Number one, product mix change into a higher margin category. That's number one, because in those cases, your bottom line growth is faster than your top line growth, and you get valuation re-rating in those cases. Number two, deleveraging, because debt is a part of capital employed. As debt goes down, capital employed goes down, return on capital employed goes up. Plus, as debt goes down, interest cost goes down, so net profit goes up, market cap goes up. Number three, operating leverage, which can come from having high unutilized capacity just at the beginning of an industry upcycle. Because in those cases, your bottom line grows much more faster compared to your top line growth. Because you're basically, once your fixed costs are covered, then you get a lot of revenues flowing directly into the bottom line. Number four, industry cycle shift. So as an example, in middle of 2020, the residential real estate cycle in India turned around after more than a decade. So we have had many multi-baggers coming from the building material space in India in the last 3 years. Number five, regulatory change, very powerful source for variant perception. So since early 2020, the government of India has been putting a heavy emphasis on ethanol blending, and we have had many multi-baggers coming from the sugar mills and distillery space. Last year, I'll give one more example. The Reserve Bank of India changed the regulatory guidelines for microfinance companies. Now microfinance companies no longer have that 10% interest rate cap on their loans, and they're also allowed to have 25% of their loan book in non-microfinance industries. So now that not only that there's an addressable market go up multifold, now they can price risk appropriately as well, now that interest rate cap is gone. So in our PMS as well, we are holding one of the leading microfinance companies of India, which is right now trading at a 50% discount to the sector leader. But as the industry tailwinds grow stronger and this company reports very strong earnings, this valuation gap will narrow. So you will get valuation re-rating coupled with earnings growth. This is how you get multi-baggers.
So these are 4 or 5 things that you look at.
Correct, in variant perception. The second pillar is long-term structural trends. So what is long-term structural trends are found in industries with a very favorable structure. They're organized like a monopoly or a duopoly or an oligopoly at best. And why is this so important? It is because competition acts as friction for value creation. There are no prizes for difficulty in investing. And like Warren Buffett says, I don't look for 7-foot bars, I look for 1-foot bars which I can easily step over, right? So you want to look for places where there is next to no competition or very low competition. So industry structure plays a key role here.
So sorry to interrupt in between. So value migration is a separate theme and this is a separate theme, right?
Yes. Okay. So but you can also get long-term structural trends in the industries which are characterized by value migration. So in India, for the last 20 years, we have had value migration from unorganized to organized, public sector to private sector, offline to online.
Yeah, unorganized to organized.
Correct. So basically, you can also write these structural long-term tailwinds. They also fall.
So does this become part of your overall evaluation when you look
Yes.
at it?
Ideally, you want a scenario where all these elements are present, because at the end of the day, investing is all about trying to maximize the probability of success in a particular investing activity.
Yeah.
It's a probabilistic activity. Even after our best efforts, the outcomes may not be in our favor because it's a probabilistic activity at the end of the day. But as fund managers, as equity analysts, our endeavor all the time should be on trying to maximize the odds of our success. That's the best we can do. Once we have selected the stock, after that, all that we need to focus on is our personal behavior.
Right.
That is where temperament plays a very key role.
But one contrarian question here, Gautam, is that the other school of thought says that when you're looking at mid and small cap, you need to book profits at the regular interval more, because of late, the waiting period of these managers are not more than a year these days, and you need to churn the portfolio a lot. And when you correlate this with long-term investing and managing volatility, would it not be difficult, and at times would this not backfire the overall performance?
It all depends on the characteristics of the underlying business. So let me ask you a question. HDFC Bank was a small cap 25 years ago.
True.
If you had told an investor or a client to book profits in HDFC Bank along the way, would that client have become rich or wealthy? No,
not
right?
at all.
So look at any large cap or big size mid cap today, which was initially a micro cap or a small cap. If you want to become wealthy from small cap or mid cap investing, then you have to hold on. To have a 10 bagger in your portfolio, you need to hold on to a 10 bagger in your portfolio. That is how true wealth is created. It's not by hopping in and out of stocks all the time, depending on the market mood or the market cycles. It's about holding on patiently to good businesses with growth over a long period of time, as long as they are exhibiting the characteristics of capable and honest management, good growth prospects, and valuations have not become absurd. As long as these three conditions are being fulfilled, just hold on, because the quality of good quality equity, this supply of good quality equities in India is very limited. The moment you get hold of one or two of them, hold on for dear life, because the demand supply dynamics ensure in India that the high quality equities are priced very expensive very quickly, because there's so much demand for these quality equities, but the supply is very limited. That's why many foreign investors cannot get their head around why are businesses of good quality trading at such high expensive valuations in India, because they are so limited in number.
Sure. So my entire team is sitting out here and they have a lot of questions for you, Gautam. So if you don't mind, can we start the Q&A, because when they got to know that you're coming, they all prepared their questions and they're very curious to know a lot of things from you. So what we'll do is we'll open the forum for Q&A now, and guys, you can ask your questions. So over to you, Samit. The first question maybe, Mansi, you can start. Samit.
So hi Gautam sir, I've read your book The Joys of Compounding and it's really amazing. So I have a question for you. So how do you say that humility increases the savings and not the income? I would like to know that. Just curious.
The most effective way to increase your savings is not to increase your income, it is to increase your humility, because many of us we fall prey to what is known as lifestyle creep. As our incomes go up, we adjust our standard of living accordingly, and therefore there is no change in our savings level even after increase in our income level. So to build up your savings over time, increase your humility. What is important is not to fall prey to these comparison games and trying to compete with the Jonases. What's important is to play your own game, because life at the end of the day is a single player game. You have to play the game which is aligned with your personal value system. No need to impress anyone else.
Right. So next question. Yeah.
Hi Gautam sir, Gurvanshi this side. I read your book The Joys of Compounding. My question is from chapter number 23, and my question is, how does growing firms with excess returns are more valuable than NPV?
So the difference between the return on capital of a business and the cost of capital of a business gives us the free cash flow yield, and the intrinsic value of any business is the present value of all the future free cash flows of that business up to perpetuity, right? So that is why growing firms with high returns on capital, which are above the cost of capital, are the most valuable type of businesses to own, because any business which is growing but earning less than its cost of capital is destroying shareholder value. But any business which is earning more than its cost of capital and growing its top line at the same time, those are the kind of businesses which create a lot of wealth for shareholders over time.
So Gautam sir, it is a very great honor to speak to you. So do you think special situations is the new way to invest into value?
So special situations is nothing but value investing with a clear catalyst, a clear trigger. A special situation is one in which a corporate development has been announced by the company, and you have a broad certainty about the timeline within which that corporate development will be completed. You cannot speculate on that something will happen. A special situation only starts when an actual corporate development is underway. So that is what special situation is all about. And at the end of the day, like Charlie Munger has taught us, all intelligent investing is value investing. You are basically trying to pay less than what you're getting in return. So I think all investing situations where you can earn a good return with low risk, that is the definition of value investing.
Gautam sir, I would like to ask a question. That is, when you say if anything is new in finance, but that is a history, can't there be any new incidents apart from the one that has happened in the past?
Sure. So in the book I've talked about this, that there is nothing new in the world of finance except the history that we haven't read. So when COVID-19 happened in early 2020, many of us were taken aback. But if we simply had gone back in history and seen, in 1918 you had the Spanish flu pandemic, and we have had instances of pandemics in the past. But because we don't learn from history, so we get surprised by the developments as and when they occur. So it's very important to be a long range history student. Go back just not 10-20 years in time, go back centuries in time, because there's so much wisdom from history which we can obtain. I think the one key thing which changes in today's world is the pace of technology developments. I think that is the only key thing which is really changing with every passing day. The level of technology is really changing very rapidly. So we have to keep adapting ourselves, because many businesses which were so-called inevitables or very, very strong businesses have been disrupted by technology. And we have case studies from the past, and we are seeing even companies today being disrupted by technology. We have to be on top of the technological trends. I think that is the only thing which you have to keep in mind. But the one thing which will never change across time over the next century as well is human behavior. The perennial emotions of greed and fear and hope and apprehension and all the different kinds of human behaviors. I think those things will stand the test of time, and that's why all of us should be avid students of psychology. As Seth Klarman, the famous hedge fund manager, has said, value investing is nothing but the marriage of psychology with a calculator. So apart from the quantitative side, you also have to focus on the behavioral side.
So sir, I would like to ask that can you share some personal anecdotes or stories of compounding that have made a lasting impact on you?
Sure. So I think the biggest example which I can give is in terms of compounding knowledge. So I started investing in the stock market from late 2007, but up to late 2013, till the time I had not started educating myself on the value investing discipline. Till that time the results were very, very bad. It's only after I started educating myself on the philosophy of all the investing greats like Warren Buffett, Charlie Munger, Phil Fisher, Howard Marks, Peter Lynch, and all the other greats, that is when I really started to improve. So compounding knowledge is very, very powerful. And I always tell people that if you want to become a good lawyer, you need to study and practice. If you want to become a good doctor, you need to study and practice. Similarly, if you want to become a good investor, same thing, study and practice.
Right. Next, Bhavya, over to you.
Hello, Gautam sir. So my question is, like, in the first section of the book, you have mentioned that wisdom through latest work of mental health. So could you please illustrate more on this, sir?
So Charlie Munger has coined the term lattice work of mental models. Mental models are how we make sense of the world around us. Mental models are simply an explanation of how things work. And value investing is a multidisciplinary discipline. So you not only have to look at finance, it's just one of the many dots to connect in the world of investing. You have to look at philosophy, history, mathematics, psychology. There are multiple disciplines involved, and through combination of all these disciplines, that is when you really get those eureka aha moments and those big breakthrough insights to make a great investing decision. So I think we all great investors have one common habit. They just love to read all the time, they love to study all the time, and they love to keep educating themselves all the time on different disciplines. This is how you are able to maintain your calm and temperament during the turbulent times in the market as well, because you need to have the right intellectual framework, the right temperament. And like Buffett has said, we don't have to be more intelligent than the rest, we just have to be more disciplined than the rest. And this discipline, being more disciplined than the rest, this attribute will come to you only when you're very well read, when you have got a good grounding in history, you have got a good grounding in the various psychological biases. Every value investor should read Charlie Munger's speech at Harvard called on various psychological biases of human misjudgment. That's an essential must read for everyone.
Yeah, next question from Mohit.
So, sir, in this book you have mentioned that people calculate too much and think too little, and also in the later part of the book you have mentioned about stress influence tendency on people. Can you please elaborate on this?
Let me answer the second part of your question first on stress influence tendency. This is a very common thing in the stock markets. When there is a lot of turbulence and volatility, we tend to end up making rash decisions because we are under stress. Investing is a field in which you should never take hurried decisions. We think we make our best investing decisions when we are able to think with a calm mindset and when we are operating with low stress. So make sure to design your work environment and your daily environment in such a way that your stress is minimized. That's very, very important, because we design our environment first and then our environment shapes us as well. So make sure to create a conducive environment for thinking clearly and rationally. So that's the answer to your first question about stress influence. The earlier question was about calculating too much and thinking too little. So almost all of us humans, we have a tendency to think in terms of black or white. But the world is not black or white. The world is always in shades of grey. Again, this applies to investing as well. Investing is a probabilistic activity. There is no such thing as a perfect company or a perfect business. Every business you invest in will come with some risks attached to it. And as investors, we all have to live with the risks that we can understand.
Alright, so great, Gautam. It was pleasure interacting with you, and thank you for answering all the questions so patiently. With that, we'd like to conclude the session here and wish you, on behalf of entire AIF and PMS Experts India team, we wish you all the very best for your newly launched PMS Stellar Wealth. Thank you.
Thank you, Vikas.
Thank you.